right, well, good afternoon and welcome to the March Crop Production and WASDE briefings. My name is Lance Honig and I serve as acting chair of the Ag Statistics Board here at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We're very pleased to have Dr. Seth Meyer, USDA's chief economist, join us as Secretary Designate today. Before I turn things over to our presenters, I have a few notes for our live streaming audience. The crop production and WASDE reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports within 30 minutes of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone or email questions, and NASS will host a social media event at 1 o'clock Eastern time today. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'm going to turn things over to Chris Hawthorne, acting chief of the NASS Crops Branch. Chris will be immediately followed by Dr. Mark Jekanowski, chair of the World Ag Outlook Board. Chris.
All right. Thanks, Lance. Good afternoon. Just have a couple things to cover today. Citrus and sugar is the bulk of what we did. So we'll go ahead and get started with where we got the data from. As you know, the main driver for the citrus data is from the objective measurement, also known as the size and drop survey that we conduct in Florida. February 12th through the 23rd was when that was conducted, and we visited 872 groves. Also, we did the row count survey with 61,000, a little over 61,000 rows, February 26th through the 27th, to determine the estimated percent harvested to date of the production. We also get utilization data from the Florida Citrus Administrative Committee on the quantity of fruit packed or processed to date. For the sugar, we contact mills in Florida for updates on expected acres and yield. Getting into the citrus numbers, Florida and California are the only ones reporting this month. There were no changes to oranges from Florida, but we did have some slight changes in California. So that those changes equated to production that was up 0.3% from the previous month and up 11.5% from last year. But remember, last year was a hurricane year. Non-Valencias are unchanged, so all the change was in the Valencias in California there. The only Florida was reporting for grapefruit this month, and the Florida forecast is down 200,000 boxes from last month, but up 390,000 from last season. Lemons, since there was no estimation program this month, that was just carried forward from January, or actually from January. Tangerines, only Florida as well this month. Florida forecast is down 50,000 boxes from last month, but up 20,000 from last season. If realized, the Florida tangerine production will be the third lowest on record. The lowest record was the 1919 and 1920 season at 450,000 boxes. Switching it up over to sugarcane. Again, Florida is the only reporting this month. This is the final sugarcane estimate for the 2023 season. Harvested acres are estimated at 930,000 acres. 36.3 tons per acre is the average yield, and production is estimated at 33.9 million tons. That will be the second highest sugar and seed production on record, next to 2020's crop for Florida. And just getting into the upcoming reports, we have on March 11th, the price reactions after USDA crop and livestock reports. We have March 15th for the small grains final county estimates, and that'll be a quick stats only release. March 22nd, the cattle on feed report. March 28th, we'll be looking at the ag prices, grain stocks, hogs and pigs, prospective plantings, and rice stocks in here as well. April 1st are our care reports, cotton systems, fats and oils, grain crushings, and then that is our first crop progress of the year. April 4th, ag land values, final estimates, a quick stats only release. April 10th is our crop production historical track records. And then April 11th, we'll be back in here with the next iteration of the crop production report. Just a reminder to everybody that we'll have our data users meeting, the USDA spring data users meeting on April 16th. That will start at 1 Central Time, online or in person in Chicago. So make sure that you register for that and attend. There will be a lot of good discussion on our data. This afternoon, we also have our Stat Chat series where Lance Honig will be on X answering any questions that we have on today's report or any other data that you might have questions about. And this is where we find you can find our reports today and other reports that we have out there on our website. So if there are no questions, I will turn it over to Dr. Mark Jackanaski.
All right, thank you. That was quick. You barely gave me enough time to finish putting together my presentation. All right, well, let's talk a little bit about the WASDE this month. So just a few things we're going to highlight here today. As you know, we got, as you saw, little information from NASS this morning. So relatively few changes in the domestic crop balance sheets, notwithstanding some changes in cotton and sugar that I'll talk about a bit later. But otherwise, we're focused on some international developments, including the soybean production in Brazil, rice production in India, and we'll talk a little bit about corn production in South Africa. So let's go ahead and start with global wheat production. Basically, what we have here is essentially a lot of updated government estimates, updated data that net out to an increase in global wheat production of 1 million tons. So all of these, including Russia, that's Rostat data, so we're more in line with their production estimates this year. And so as you can see, nothing huge this month in terms of the global wheat production situation. Balance sheet, few things worth noting here. Feed use up 1.6 million tons. Couple things there, mainly two countries, EU, where we're seeing increased imports from Ukraine, increased wheat supplies going into EU from Ukraine, and then Kazakhstan, where they had some rain at harvest, so that's impacting the quality. So more feed use for wheat in Kazakhstan. Ending stocks tightening up, lowest since 2015-16. Trade up by 1.4 million tons. That is mainly Ukraine. We raised again 1 million tons. Now it's 16 million. Australia also up on larger crop estimate there. Partially offset by lower exports out of the US, which I'll talk about soon. Ending stocks tightening up a bit. That is mainly lower stocks in China and Ukraine, given that they're exporting more. US wheat balance sheet. Only thing we adjusted here this month, worth noting anyway, is trade, exports, down 15 million bushels. Soft red winter accounts for 10 million bushels of that. And that reflects a few things, including those recent sales cancellations by China. And also reduced HRW, hard red winter, by 5 million bushels, and just reflecting the relatively sluggish pace of hard red winter exports. Prices pulled them down a bit there, 5 cents per bushel. Maybe no surprise there, just based on observed prices. And you know what they've been doing really since, especially since the start of the year. Rice, world rice production, pretty small changes overall. We're going to talk a little bit about India. Australia, that's ABARE's new estimate there. Philippines down a bit too, dry conditions reflecting the El Nino situation. So let's talk a little bit about India, where we raised production 2 million tons. And we're going to focus in on this area outlined in red there. Just as a reminder, India produces three main crops, Kharif crop and then a Rabi crop and a summer crop. Kharif crop is by far the largest. Rabi and summer crops combined to account for about 30% of production. But essentially what we had here, most of this area as well is rain fed. That's important to point out. But we had a situation where we had poor rainfall early in the season. Typically that crop gets planted beginning in late May into June. But poor rainfall conditions delayed planting. Then we got a really good dose of rainfall late July into August, continued into August. So conditions were very good, giving lots of incentive to increase area, increase acreage. But then toward the end of the season, monsoon cut off prematurely, so that impacted yields. So essentially what we have happening here, production up this month, largely for the Kharif crop based on higher area, partially offset by lower yields. So up 2 million tons to what would be the second highest crop on record for India. Rice balance sheet. A few things to talk about here. Beginning stocks up. That is largely driven by a revision to Pakistan's crop in the back year. Larger crop than we had anticipated, despite the flooding that occurred there. So that's what's driving a higher carry-in. Rice trade exports up from Pakistan, Thailand, Vietnam, also raised our imports into Indonesia. Indonesia now approaching Philippines in terms of the largest global rice importer. Ending stocks up, mainly reflecting higher stocks in Pakistan, India, and Indonesia. So that the higher production the higher production that we're carrying for India this month just goes into their stocks, essentially. U.S. rice balance sheet. Again, the only changes worth noting here are on the trade side. Exports up 1 million hundredweight. And there's some offsets there. 3 million hundredweight increase for long grain. Strong pace of exports to Latin America. Long grain exports to Latin America. Partially offset by a 2 million hundredweight reduction in medium short grain exports, slow pace to Northeast Asia markets. Held steady on our import forecast. As you know, we've been raising that pretty strongly past few months, but we seem to be on pace to maintain those pretty high volume of imports. Average market price up 40 cents per hundredweight this month, and we raised prices for all classes of wheat, all classes of rice this month, just based on observed prices and also relatively strong futures prices as well. Moving into corn production, put up the back year. So global corn production, put up the back year estimates here, just to point out the change we made for Argentina. Based on use data, we raised the size of that crop by 1 million tons. So larger Argentina crop. That also carries through into the new crop year, kind of calibrating from that. It's an area adjustment. So calibrating from that higher area, that's going to carry through into the new crop year, along with also supported by data from the Bolsa. Mexico corn production, we reduced 1 million tons. Drought conditions, we'll talk about that more when we talk about sugar. But drought conditions in Mexico, low reservoir levels, and this is winter corn planting, where planting is just underway now. So that's where that production cut is coming from. The rest of it, Ukraine, Russia, largely harvest results there. Some modest reductions in production for those areas. And in South Africa, we'll talk about that just a bit. We cut South Africa production as well. So South Africa corn production, just a map of the main regions within South Africa where corn is produced, and to point out that we're kind of in the mid-season here. Crop has been planted. We've got, you know, a little bit more than a month or so before harvest really picks up with any intensity. So mid-season, but basically we're looking at what has been really since January, pretty dry and hot conditions. So we're going to look at two main regions here, Central Corn Belt. Things really dried out starting early to mid-January and remained dry. Similar Western Corn Belt, again, dry conditions, good rain earlier in the season, and then it's been dry again since early to mid-January. And it's also been hot. So temperatures well above average and for the most part above last year as well in both of these main production areas. So given that, you know, we anticipate production to be down this year over year, and we trimmed yield which is driving that lower production forecast this month. Global corn balance sheet. Few things to point out here as well. Put up the back year balance sheet again. Trade, so corn trade reduced 800,000 tons this month, mainly reflecting a couple things. Higher late season shipments from Argentina, more than offset by lower shipments from Brazil. So I mentioned earlier that we raised Argentina's production, partly because we saw that those higher export shipments. But on the other hand, Brazil shipments have been lower, turned out lower than we anticipated. Still record, nevertheless, for last year from Brazil. So then for the new crop year, carrying in a little bit higher beginning stocks. That's mainly in Brazil, given their lower exports from the previous year. Production we talked about, so tightening up total supply by about 1 million tons. Trade up 1.4 million tons, mainly reflecting two things. Argentina, higher exports out of Argentina. We raised a million tons. And also Ukraine, up 1.5 million tons this month, now at 25.5 million tons. And that's offset partially by lower exports out of South Africa and India. And South Africa reflecting smaller crop, India reflecting just the fact that they are not price competitive in global markets. U.S. balance sheet, not much to talk about here other than that we lowered the price a bit. Again, just reflecting reported prices to date. And again, that probably is not a big surprise given where markets have been going for the past several months. Prices have been going for the past several months. All right, so let's move into soybeans. We'll talk, main change here is Brazil, lowered production in Brazil, 1 million tons this month. Also reduced South Africa. It doesn't show up on the list there, but that's also consistent with the story and related to corn. So South Africa and Brazil both lowered, tightening up global production by 1.4 million tons. Now we'll talk a little bit about Brazil. We've had this in the briefing for a few months. As you know, it's been a complicated weather year in Brazil, kind of characterized by good conditions in the far south, Rio Grande do Sul, a little bit more spotty conditions in the center west. As you'll recall, slow start to the rainy season, extreme high temperatures, fairly erratic rains even once the rainy season began. But in harvest is well underway, especially in the center west. And but if we look at both the furthest southern parts of the country and further northern parts of the country, there's still weather conditions are still important. Harvest is still underway. Crop is still developing. Speaking of harvest, so as you can see here, Mato Grosso essentially complete. This was 86% as of March 1st, so we're approaching the finish line there. Nationally, we're just under 50% harvested at this point. running a little bit higher than average. But as you can see, there's still a lot left to harvest in the south and in the north. And the main thing that's driving the reduction this month is this region, particularly Paraná, where this is based on, we have harvest results data showing that production is low, but again, kind of a review from previous lockups. We had very dry conditions in January, and then some rains later, but the crop still never quite caught up. So harvest results there suggesting a smaller crop. And then also just a little bit further to the north, Sao Paulo, similar, again, dry conditions, likely impacting that crop as well. But again, just to drive the point home, if you go further south, Rio Grande do Sul, very favorable, good conditions. Huge change from last year, if you recall, where it was a devastating drought. So a big change there. And so when you net it all out across the country, we reduced production by 1 million tons. As you can see, still second highest on record. Global balance sheet. Got a few things to talk about here today on the global soybean balance sheet. One thing to bring to your attention is we revised multiple years of China crush data going back to about 2020, 2021. And we also revised recent years of China's import data. So let's look at, we put up the back year here. So we revised higher China's crush data going back several years, and that's driving those higher beginning stocks. Lower beginning stocks. They've been crushing more, so that's been tightening up supplies. And that's also reflected in this 1 million ton increase in beginning stocks for last year. That's a revision to China's crush estimate. The other thing that'll attract your attention is a big change in China's import statistics, China's import data. And basically what we have going on here is we started to see a pretty large diversion between China's import data and major countries' export data. So we moved so this change is really reflecting what we're seeing as the major countries saying their exports to China are versus what China has been reporting as their imports. That change, that sort of fundamental change, then also carries through into the new year, again, reflecting data on country exports to China instead of simply China's data on their imports. So, and given the relatively strong pace, again, this year raised 3 million tons this month, up now to 105 million tons for China imports. The rest of the balance sheet, current year balance sheet for soybeans, beginning stocks, again, tightening up, coming into the new crop year, reflecting those China revisions to crush. Crush this month, we actually reduced by 1.1 million tons, mainly reflecting smaller crop in Brazil and South Africa. So smaller crops in Brazil and South Africa, and higher exports out of Ukraine, meaning that they're exporting more, crushing less. Trade, global soybean trade raised this month 3 million tons, and that is reflecting a 3 million ton increase in Brazil's exports, reflecting their pace, and ending stocks tightening up. So again, some pretty important revisions here, mainly based on a new way of looking at China. U.S. soybean balance sheet, no changes this month, so we can move on from that. Literally no changes. But so since we didn't have much to talk about on the soybean balance sheet, I thought I'd put in the soybean meal balance sheet where we did have a few changes. Soybean meal production up a little bit just based on a higher extraction rate. No change in crush. But the big change that's kind of worth pointing out, strong export pace, so raised our exports, and that largely comes out of lower domestic use. No change in price for soybean meal either. All right, so moving into cotton. So here we'll talk about the US in a couple slides from now. Other countries, Argentina, production down 100,000 bales, just not ideal conditions a little bit. That's a yield reduction. It's been a little bit dry there, impacting the yield outlook. And in India, up 500,000 bales, and that is just based on arrivals data. So global balance sheet, few things I'll note here. Consumption, we raised 500,000 bales. That's mainly China and India. Trade is up 400,000 bales. That is mainly imports into China, where it essentially declines, lower imports among all of the other major importing countries. So China, demand from China remains strong. That's driving that consumption increase this month. And some of those imports clearly are going into state reserves, into China's own stocks. U.S. cotton balance sheet. Here, we made some adjustments based on the cotton ginnings report that we got this morning from NASS. And essentially, it suggests that the crop is a bit smaller, 330,000 bales smaller than we had been forecasting. And in this case, that virtually all comes out of ending stocks, tightening up ending stocks. Didn't make any change to our export forecast. Also didn't make any change to our price forecast. About 2/3 of the crop is marketed at this point. As you know, prices have, spiked in the past couple of weeks, but certainly doesn't, short term doesn't give us enough to base any kind of change in the farmer price at this point. All right, let's talk about sugar. As has been the case for the past few months, there's a lot going on in sugar this month as well. So we're going to start again with Mexico, because the situation in Mexico is really what drives the U.S. balance sheet as well. So we reduced Mexico sugar production, 128,000 metric tons. Yields are down. We've been talking for many months now about the drought down there affecting yields. Also worth noting that recovery is record low. So not only low yields, also record low recovery. Not exactly sure why. Could be lower use of inputs, high fertilizer prices might be affecting the quality and therefore the recovery rate. So regardless, production down again this month by a not insignificant amount. Exports down as well. So we reduced the low pole production to 9% this month. That would be the low pole production destined to the U.S. The export figure that we have right now from Mexico, that's mostly coming to the U.S. We have about 25,000 tons still going to third countries, but mainly that's sugar coming into the U.S. And as you can see, that amount has been reduced quite a bit, over 100,000 tons this month relative to where we were last month. Domestic use down a little bit as well. And because domestic use is down, since ending stocks is kind of a calculated level based on wanting to have enough on hand to cover a certain amount of domestic use over time, ending stocks down as well. And then imports are sort of the residual. So imports are down 52,000 metric tons. That's what kind of makes the sheet balance. So with those lower exports from Mexico, mainly lower exports destined to the U.S., that shows up in the U.S. sugar balance sheet. as a reduction in 133,000 short tons after you make the conversion, short tons of sugar coming into the US. Now, as you also know, just earlier this week, Wednesday, Thursday, I forget, we had a new TRQ announcement, 125,000 metric tons. So converting that into short tons gives us, raises TRQ imports by 138,000 short tons. Just a kind of a sheer coincidence that that increased TRQ imports, essentially offsets, just a little bit more than offsets the reduction in imports from Mexico, leaving total supply down only by the reduction in U.S. production. So let's talk about U.S. production a little bit. Fairly significant reduction in U.S. beet sugar production this month. And again, might not be too much of a surprise there. That is reflecting poor beet pile conditions. So increased beet pile shrink given the warm temperatures in the Red River Valley and Michigan, and also a lower recovery rate. So lower U.S. production, lower imports from Mexico, higher TRQ imports to offset those lower Mexico imports, but ending stocks still tightening up by about 105,000 short tons, and stocks to use ratio down to 13.4%. All right, meat and livestock. Let's see what we have here. Beef production up a bit this month. That's mainly based on, although we had lower production in the first quarter of this year, but we expect the pace to increase in the subsequent quarters to more than offset the lower first quarter, raising beef production for the year relative to where we were last month. Pork production raised mainly based on first quarter pace, higher pace of slaughter, which more than offsets lower weights. Broiler production up 100 million pounds based on recent slaughter and placement data. And we also expect that with lower feed costs, that's going to also give some incentive to increase production further out in the year. Turkey production adjusted a little bit lower this month. That's based on hatchery data. Prices, steer prices, just observed strong prices and strong demand for cattle, strong beef prices as well. So just reflecting what we're seeing there in the market for both in the market for steers. Also hogs, here hog prices, this is more based on expectations of strengthening demand, especially into the second and third quarter of this year. So pulling prices higher from where we were, $1 per hundredweight higher from where we were last month. Turkey prices, finally a little bit of a change in direction here. Raised our turkey price forecast by a penny a pound. Those prices, as you know, have been depressed. We've been chasing them down for some point. Maybe we hit a bottom. We'll see, but a little bit of an increase there just based on observed prices. U.S. meat trade, not too many big changes here this month. Small changes just based on recent data. Pork exports up, several markets there. No one market really driving that. Broiler exports down. Again, several markets, including noticeably China and Taiwan, lower exports to there. Beef imports, again, this is something we've been increasing pretty regularly month over month. Strong demand for processing grade beef, high U.S. beef prices, and most of this is coming from Oceania, Australia in particular. So dairy production down this month, 900 million pounds, and that reflects both the slower growth in milk per cow as well as lower cow inventory And then tying that lower production forecast in with, tighter supplies also means tighter, tightening supplies of products as well. So higher imports and lower exports. Relatively strong U.S. prices for these products like we discussed last month. So higher imports, fat basis dairy imports, that's mainly cheese and butter on the import side, while also lower exports, U.S. exports of cheese and butter, given relatively tight supplies and strong domestic prices. Skim solid spaces, many products there, many dry products, lower exports of NDM, whey, many other products as well. We're just less competitive. Global prices are coming down. And then finishing up here with dairy product prices. Cheese and butter, again, observed strong domestic demand, pulling those prices higher. While on the other hand, lower international prices, strong international competition, pulling down prices for non-fat dry milk and dry whey products. Class prices, class 3 price up, up 5 cents per hundredweight, mainly reflecting higher cheese prices, offsetting the lower whey price. Class 4 price down, mainly driven lower by the lower non-fat dry price. And all milk price up 30 cents per hundredweight this month to $21.25 per hundredweight. So that's all I have in terms of the WASDE data this month. I will just point out for you, Seth, as well, and I think you know this, but just for anyone listening online who might not know this, this is the last month that Steve McDonald will be with us as our cotton analyst, cotton chair, with over 40 years of service to USDA, and I think he's been with the board since about 2017, leading the cotton analysis for USDA. So we're going to miss him, but this is his last month, and I'm going to leave it at that. Thank you, everyone who joined online. We will see you back next month, and we can open it up to questions.